Good day, everyone. So for this video, we will try to answer the self-check of Chapter 1, Lesson 1, Liabilities. First question, what amount should be recorded in the statement of financial position as total liabilities? Problem. Donkey Company reported the following information at the end of reporting period. First, accounts payable, advances to employees, unearned rent revenue, estimated liability under warranties, cash surrender value of officers' life insurance, bonds payable, discount on bonds payable, and trademark. What amount should be reported in the statement of financial position as total liabilities? Since the question here is the total liabilities, so that means it is regardless of whether it is current or non-current. What are we going to identify here is the liabilities in general, which is or which meets the characteristic of a liability, namely the present obligation arising from past event by which there is an expected outflow of economic resources. Okay, so what is the liabilities or what are the liabilities here? We have, of course, first the accounts payable. Okay, the accounts payable amounts to 1 million pesos. Next, we have the for the advances to employees. Take note that advances to employees are cash advance that is given to the employees. Now, since that is a cash advance, we still have a receivable from the employee, which is the services that is to be rendered to the employees to the company. So that means it is not a liability, but rather an asset of the key company. Next, unearned rent revenue. Take note that an unearned revenue is revenue that is already received but not yet earned. Now, since in this case that it's rent, so that means the rent, the let's say the lessee, okay, or let's say the boarder or the one who rented already paid cash in advance to the company. But such lessee did not still occupy the property which that lessee rented to the company. Okay, so there is cash advance, but the entity still did not render any services yet to his client. So that is 300,000. Next, estimated liability under warranty. So this is a warranty liability. This happens when we sell some appliances or gadgets in which we provide warranties to our customers. So that is free repairs. Okay, so that is estimated liabilities under warranties that amounts to 250,000, and that is a liability. Next, cash surrender value of officers life insurance. So cash surrender value is a form of an asset, okay, not a liability. Next, bonds payable. Of course, bonds payable from the word itself, it is payable, so that is a liability. Now, of course, discount on bonds payable is related to the bonds payable, but the treatment of the discount is a deduction to the bonds payable. Hence, we deduct it in the liabilities. And lastly, we have trademark. Take note that a trademark is an intangible asset and not a liability. So for this problem, our total liabilities amounts to, we have the sum of Okay, so I guess there is, so in our computation, I guess I had a mistake. I deleted the estimated liabilities under warranties. Okay, so I'm gonna add it here. Estimated liabilities under warranties, that is 250,000 50,000 for our total liability. So that is letter A, 6,050,000. Okay, letter A, 6,050,000. Next, we go to problem 2. For problem 2, we have Gomamela Company. The question is, what total amount should be reported as current liabilities? Now take note, since what is asked in the problem is the current liabilities, then we have to follow the requisites of the current liabilities. Okay, current liabilities are those liabilities that are expected to be paid within 12 months or within the operating cycle of the business, or if the purpose of the liability is for trading and when there is no unconditional right to defer settlement of the liability for at least 12 months from the reporting period. Those are the characteristics of a current liability. Now let us see which of the following accounts does not meet those characteristics and which meets the characteristics. Then we have Gomamela Company provided the following liability account on December 31, 2019. First, accounts payable. Take note that accounts payable arises from the purchase of merchandise from the supplier. So that means the purpose of accounts payable is trading. So whether or not the accounts payable is paid within 12 months or beyond 12 months, this will be treated as a current liability because of its purpose, that is under trading. Okay, the next we have the bonds payable. Take note, class, that since bonds payable or the bonds payable here is silent as to its due date, but take note that usually bonds payable are long-term liabilities. Why? Because bonds payable constitutes large amounts of money. Okay, so usually this is really a long-term liability because it usually involves large amounts of money in which it may take more than 1 year for a company before the company pays the liability. So therefore, it doesn't meet our current liability characteristic. And as well as the premium and bonds payable because it is related to the bonds payable. Next, deferred tax liability. Accordingly, the deferred tax liability is based on temporary differences that will reverse in 2021. Now, class, take note that a deferred tax liability will always be a non-current liability, regardless of when it is expected to reverse. Okay, this is always a non-current or long-term liability. Next, dividends payable. So, dividends payable are usually current. Okay, dividends payable are usually current because usually it is paid every year. So that is usually current. And also as well as the income tax payable because income tax payable is paid every year. So that is current. And then lastly we have note payable due January 31, 2020 of 600,000 pesos. Take note, today is December 31, 2019 and the note payable is already due 1 month from now. So therefore, it is a current liability. So we record here note payable of 600,000. So how much is our total current liability? So we have 19 plus 500 plus 900 plus 600, that is 3,900,000, and that is letter C. Okay, that is letter C. Next, let's proceed to Burma Company. Burma Company disclosed the following information about liabilities at year-end. The question is, what total amount should be presented as current liabilities at year-end? So the question here is still, how much is the current or the total current liabilities? So again, we have to consider the the characteristics of the current liabilities, namely, when such liability is to be paid within the normal operating cycle of the business, when the purpose of it is trading, when it is expected to be paid within 12 months, and when there is no unconditional right to defer settlement for at least 12 months after the reporting period. Okay, I've already discussed about that during our video conference. Alright, so let us find the current liabilities in this problem. Burma Company disclosed the following information about liabilities at year end. First, accounts payable after deducting debit balances in suppliers' accounts amounting to 100,000 pesos. So take note that an accounts payable is a current liability. But the question here is, how much are we going to record in the accounts payable account? Accordingly, that after deducting debit balances in suppliers' account, we have accounts payable of 4 million pesos. Okay? There is a debit balance of 100,000. Now, what is this debit balance in suppliers' accounts? Debit balance in suppliers' accounts represents any advance payments by Burma Company, the entity, to his supplier. Now, since that is an advance payment of the entity to its supplier, so that means that is more like a prepaid asset. Okay? Or a prepaid account. So take note that prepaid accounts are assets. Okay, because we have, in this case, since this is an advance payment to the supplier, so we have a receivable merchandise. Okay, so what is the treatment of this? Debit balances in suppliers' accounts. Debit balances in suppliers' accounts shall not be netted against the accounts payable, but rather it shall be separately presented as an asset. Okay, therefore, in the asset account, the 100,000 will be separately accounted for and not deducted from the total accounts payable. So therefore, since accounts payable after deducting is 4 million and we should not deduct such debit balance, then we have to add back the 100,000. So for this problem, we should have an accounts payable of 4,100,000. Okay, that is for the debit balance in supplier's account. It must not be deducted from the accounts payable. Again, it must not be deducted from the accounts payable, but rather it shall be separately accounted for as part of our assets. Okay? Now, next we have accrued expenses. If the problem is silent, accrued expenses are usually current liabilities. Next, credit balances of customers' accounts. So, credit balances of customers' accounts are the opposite of debit balances of suppliers' accounts. Credit balances of customers' accounts are customers' accounts that are in credit. Take note that the customer's account in an entity is the accounts receivable. And the normal balance of an accounts receivable being an asset is debit. But in this case, what happened to our customer's account is it now becomes credit. Now, what does it mean? So this means that maybe there are advance payment made by our customers. Okay, there are advance payment or overpayment made by our customers. Now, since this is an overpayment of the customer, and we have the obligation to return the overpayment, or in case this is a cash advance, and we have the obligation to deliver the merchandise to the customer, then this is treated as a current liability. Okay, because again, we have the obligation to return the excess payment or to deliver the merchandise in case that is a cash advance. Alright, credit accounts of the customer, that is a liability of 500,000. Next, claims for increase in wages and allowance by employees of the entity covered in a pending lawsuit. Okay, claims for increase in wages and allowances by employees of the entity covered in a pending lawsuit. Now take note, class, this lawsuit is still pending and we still are not sure whether there is a probability that this will become our obligation. Take note that in a liability, the outflow of economic resources must be probable. So, we must first prove whether this is probable or not. Okay? We must first prove whether it is probable or not. Now, since there are no other information in the problem, then we treat this one as not a current liability. Okay? Not a current liability. And then next, estimated expenses in redeeming price coupons presented by customers. So price coupons are those that we give to the customers whenever they purchase from our products. Okay, to give them rewards. Okay, so it's either we give them some other items, products, or we give them discounts for their next purchase. Okay, now estimated expenses for coupons are treated as liability. Okay, that is for 600,000 pesos. So how much is again the total current liability? So we have 6,700,000, and that is letter A. Okay, that is letter A. Next, let's proceed to problem 4. For problem 4, we have Grace Company. Question: what amount should be reported as current liabilities on December 31, 2019? Grace Company reported the following liability account balances on December 31, 2019. Take note, what is asked in the problem again is the total current liabilities. Now let us see which of the following accounts are under the current liabilities. First, of course, we have the accounts payable amounting to 2 million pesos. Next, bonds payable due 2020. Now, as I've said, bonds payable are usually long-term, but as of this moment, since it is already due in the year 2020, and this year, it is December 31, 2019, so that is already less than 1 year. Okay? 1 year or less. So therefore, our bonds payable here is now a current liability because it is already due to be settled within 1 year. And of course, since the bonds payable has become current, the discount on bonds payable, which is related to the bonds payable, also follows the bonds payable itself. Okay? So if the bonds payable is current, the discount is also current. If the bonds payable is not or non-current or long-term, then the discount on bonds payable is also long-term because the discount on bonds payable is deducted from the bonds payable. That's why it should follow whatever is the classification of its related bonds payable. Next, deferred tax liability. Take note that this is always non-current. Accordingly, the deferred tax liability is based on temporary differences stemming from different depreciation method for financial reporting and income tax purposes. Now, whatever is the condition of that deferred tax liability, it must always be treated under the non-current liability. Okay, if you remember in our PDF, in the PDF of the book, you can see there the lists of the non-current liabilities, and that includes the deferred tax liability. Okay, next we have the dividend payable due on February 15, 2021. Take note that that is still beyond 1 year because today is still 2019, next year is 2020. 2021 is already beyond 1 year, so it is not current. Then we have income tax payable. Of course, we pay income taxes during April 15 of the following year. Okay, so this is always current. And then lastly, we have note payable due January 15, 2021. So just like the dividend payable, it is payable beyond 1 year. So it is not a current liability. So for this problem, how much is the current liability? We have 6,400,000. Okay, 6,400,000, and that is letter A. Alright, now let's proceed to number 5. Number 5 is again Gamamela Company, but this is a different problem. The question is, what total amount should be reported as current liabilities? So again, the question is current liabilities. Okay, this is problem 5. Gamamela Company provided the following data on December 31, 2015. First, trade accounts payable including cost of goods received on consignment of 150,000. Again, trade accounts payable including cost of goods received on consignment of 150,000 pesos. So what is this consignment? Consignment are the products that are being consigned to our entity. For example, in a school, there is a canteen. Now, there is this outside vendor who sells, let's say, banana Q. Now, in order for that vendor to sell his banana Q to the students of the school, then he consigns the banana Q to the canteen. Okay, so what is the treatment of a consignment class? So consignment, or the selling price of the consignment on the part of the entity, is payable to that vendor or the consignor who consigned such product. Okay, sa Bisaya pa, kato si uncle nga nagbilin sa banana Q, magbayad ta sa ilaha for the selling price kung pila nga to ang nabaligya sa iyahang banana Q. And of course, that is already net of the commission. Of course, kay gibilin man niya sa canteen, so nana siya commission. So atong ihatag sa iyaha is selling price less of the commission. Now, since hatagon man na nato sa kang kuya nga namaligya og banana Q, so that is an obligation on our part. But take note that not all goods received on consignment, or not the whole amount, is payable to the vendor or to the consignor. We are only to treat it as payable if such consignment are already sold. Okay, for example, out of the 150,000 consigned by the consignor to the entity, 80,000 were sold, 70,000 were not. So what will be included in our liability is only the 80,000. Okay? Not the 150,000, but only that portion which is already sold, which is the 80,000 pesos. Now, since in this case, there is no mention as to how much was sold, okay, so therefore, this 150,000 should not be included as part of our accounts payable. So, since in this problem it was included, we have to deduct it from the 1,350,000. 1,350,000 minus 150,000, that is 1,200,000. Okay, our accounts payable must not include the cost of goods received on consignment. Next, accrued taxes payable, so that is a current liability of 125,000. Next, customer's deposit. What is a customer's deposit? That is when, for example, you are a sari-sari store and you sell Coca-Cola product. Now, since your customer has no bottle of Coca-Cola in which to exchange to the new Coca-Cola bottle that you are going to sell to that customer, so you will ask for the deposit of the bottle. Okay, I know you can relate to this. You will ask for the deposit. Now, class, take note that the amount of the deposit that is a customer's deposit, and you have, and again, that is the customer's deposit, and that is not your money, because that is only his deposit in order for the bottle to be returned after it is being used. Okay, now since you still have the expectation that the customer will return the bottle, so therefore we expect that we are to return the deposit to the customer. Okay, so we have to return the money that the customer deposited once he complies with his obligation of returning the bottle to our sari-sari store. Now, since customers' deposit are payable to or returnable to the customer, then that is a liability on our part. Okay? Customers deposit of 100,000. Okay, that is a liability on our part. So, of course, customers deposit will not really take too long. It will not take more than 1 year for us to be able to return the deposit. So, it is usually current. Okay? Next, Gamamela Company as guarantor. Okay, so this is in a case where there is another entity who has a liability to another entity. For example, we are Gamamela Company, so we are the guarantor of Sampaguita Company. Now, this Sampaguita Company has a liability to Rose Company. Now, Sampaguita made Gamamela the guarantor. So, what does it mean to be a guarantor? That means if the Rose Company cannot anymore collect his credit from the Sampaguita Company because Sampaguita is insolvent, then Rose Company will now resort to Gumamela Company because he is the guarantor of Sampaguita Company. Okay? Sa Bisaya pa, si Sampaguita nangutang kang Rose. In case nga ma-insolvent or ma-bankrupt si Sampaguita, dili na siya makabayad sa iyang utang. Si Gumamela, pwede siya, si Rose, kung kinsa ang giutangan ni Sampaguita, si Rose, pwede siya mudagan dito kang Gumamela para mangolekta sa utang ni Sampaguita. Okay? And that amounts to 200,000 pesos. Now, question, since guarantor man si Gumamela Company, do we have to record this one in our accounts? Kaning ihang gi-guarantee na 200,000? The answer is no. Okay? The answer is no. Kaning liability nga 200,000 mo arise ra ni once ma-insolvent na jud do si Sampaguita. Pero if dili pa siya ma-insolvent, so dili pa pud mo arise atong obligation nga mobayad sa 200,000. Take note, this is not a present obligation. Pwede nga future obligation pa ni siya, but not a present obligation. Take note, in a liability, we have to consider that the obligation must be present and it should arise from a past event. Okay, so since wala pa may nahitabo nga ingana, wala pa nahitabo nga insolvency, so we will not record the 200,000 as part of our liability. Okay, then next we have bank overdraft. So I know you remember about bank overdraft. Bank overdraft is when you withdraw or you've withdrawn an amount in excess of your account balance. For example, your account balance in the bank is only 500 but you withdrawn 1,000 pesos. So that excess 500,000 pesos is not yours because your balance is only 500 pesos. So therefore, that bank overdraft is a liability on your part. Okay? So bank overdraft is a liability, 55,000 pesos. Okay? You have the obligation to deposit it again. Okay? The 500,000 because that is not yours already because it is already in excess of your account balance. Then we have accrued electric power bills, of course, Samsoreco. Okay? Baryo nun sa kuryente. Okay? Accrued electric power bills, 60,000 pesos, and reserve for contingencies. Take note, if you are reserved for contingencies, for example, you set aside your cash Okay, in case there are contingencies. So that is an asset. Okay, that is an asset. That would merely be a debit to restricted cash and credit to the general cash account. Okay, there will be no involvement as to the liability. Okay, contingencies are not present obligation. There could be or they could be future obligations. They are not present obligations. Okay, so these are all our current liabilities. So let us compute how much is our total current liabilities. So we have here 1,540,000. Okay, 1,540,000. Alright, that is problem 5. Next, let's proceed to problem 6. Able Company Able Company had the following amounts of long-term debt outstanding on December 31, 2015. Question: what total amount should be reported as current liabilities again on December 31, 2015? First, 14% note payable due 2016. Take note, it is already due within 1 year, so that is treated as current liability. Okay, 30,000 pesos. Next, 11% term note due 2018. Okay, that is to be paid 3 years from now, so that is a non-current liability. Next, 8% term note due in 11 equal annual principal payments plus interest beginning December 31, 2016. Take note last that the 8% term note is due in annual principal payments, or in other words, it is to be paid in installments. So there are portion of the 1,100,000 that is payable within 1 year, and there are portion that is payable beyond 1 year. Now what are we going to consider here is only those that are payable within 1 year, because we are only asked for the current liabilities. So the question here is how much is payable within 1 year of the 8% note. So take note that our note is 1,100,000 divided by 11 annual principal installments, that is 100,000. So meaning by next year, we are only obliged to pay 100,000. So therefore, the liability here, or the current liability here, is only the amount of 100,000. Again, that is 1,100,000 divided by 11 years. Okay, and that is 100,000. Next, 7% guaranteed debentures due 2017, that is due for 2 years. So that is not a current liability. So these are all our total current liabilities. We have 30,000 and 100,000, and that is 130,000, letter D. Okay, letter D. Next, number 7. Okay, question: what amount of the notes payable should be classified as current again on December 31, 2019? Okay, this is problem 7. How much is the current liabilities? Tagkawayan Company reported the following liabilities. So we have 12% note issued on March 2018, maturing on March 1, 2020. Meaning, today is December 31, 2019. The maturity date or the due date is March 1, 2020, and that is already 2 months from now. Okay, 2 months from now. Next, 10% note payable issued on October 1, 2018, maturing October 1, 2020. That is 9 months from now. 9 months from now. Okay, now let us see these additional details. The 2019 financial statements were issued on March 31, 2020. On January 31, 2020, the entire 5 million, which is this one, the 12% note, balance of the 12% note payable was refinanced through issuance of a long-term obligation payable lump sum. Under the loan agreement for the 10% note payable, the second liability, the entity has the discretion to refinance the obligation for at least 12 months after December 31, 2019. So, what is the treatment of this one? Let us start with the 12% note payable. Take note, class, that the 12% note payable was refinanced through issuance of a long-term obligation payable lump sum. So this means, class, atong bisayon, no, nga ang ihading utang nga 5 million kibali girefinance siya. Naghimo sila og bag-o nga kontrata in which instead nga March 1, 2020 na siya bayaran, i-extend nato siya. Ilisan nato ang iyahang due date. Okay? Mahimo na siyang long term. Imbes nga 2 months from now na lang, mahimo na siyang long term. And it is to be payable or to be paid lump sum. Okay? So what will happen to the 5 million, 'di ba? Instead nga March 1 na siya bayaran, na-extend iyahang due date. But the question here is, are we to treat it still as current or non-current na siya? Lantawo na to, class, kung kanus-a sila nagsabot. Okay? Kung kanus-a sila nagsabot. Take note, if the agreement to refinance happened, okay, it happened from the, what do we call this one? From the date or balance sheet date, or let us say December 31 or ano na lang, after the balance sheet date, okay, just wait. If it is made after the balance sheet date, that is December 31, 2019, but before the dates where financial statements were issued, but before date of issue, so that is March 31, 2020. So, if ever na ay agreement to refinance, ana, from short term, mahimo ng long term, and then nahitabo siya, after na sa December 31, pero before pa na-issue ang financial statements, ang mahitabo, ana, class, is dili pa siya ma-change from current to non-current. Okay, again, dili pa siya ma-change from current to non-current. Kay nga naman, ang question na to diri, pila ang current liabilities as of December 31, 2019. Now, kanus-a sila nagsabot or nag-agree or nag-refinance? Nag-refinance sila katunang January 31, 2020, which means after na siya sa balance sheet date nga, December 31, 2019. Now, since January 31, 2020 naman siya nag-refinance, meaning, katong panahon sa December 31, 2019, current pa siya. Okay? Current pa siya. Ngano gali to? January 31 pa man nagsabot. No? Ato ang i-record diri is as of December 31, 2019. So, therefore, as of December 31, 2019, we are still to treat the 12% note as a current liability. Okay, that is 5 million pesos. Okay, so kani siya treated as current. Ma'am, gimo namang long term, no? Baliko na ako. January 31 pa sila nagsabot. Meaning, as of December 31, 2019, dili pa siya long term. Okay? Basta between after the balance sheet date o before date of issue, makaingon man gud ta, class, nga pwede pa ilisan. Kaya wala pa man gi-issue ang financial statements. Ang financial statements man gud, dili na siya i-issue dayon nga pagka December 31, i-issue na dayon, wala pa gid na mag-record tanan, napagalit ay mga adjusting entries, di ba? So napa na siya pila ka months ay siya ma-issue. Now in this problem, March 31 daw siya ma-issue. So of course, if ever na atay mga kinahanglang i-change, pwede pa na to ma-change, no? Kung naay mga adjustments. Now take note, ang mga adjustments dapat ang i-adjust ra pud nimo katong changes nga nahitabo as of December 31. Kani siya naay changes from current to non-current. Pero kanus aman siya nahitabo January 31, 2020 pa. So meaning dili sa nato siya i-change. Pero pag abot sa 2020 ay na siya mabalhin. Okay? That is kaning pag-abot sa January 31, 2020 ay na nato siya ibalhin from current to non-current. Okay? As of now, that is still a current liability. Okay, if you have questions regarding this one, you may ask me in our video conference. Okay, now how about the second note? For the second note, under the loan agreement for the 10% note payable, the entity has the discretion to refinance the obligation for at least 12 months after December 31, 2019. Okay, so meaning class, diba take note that under the, what do we call this one? Okay, under the current liabilities nga requisites, the entity shall not have the unconditional right to defer settlement for at least 12 months. Dapat wala sila yung ana nga right. Now, since in this problem, existing man iyahang right to defer the settlement or existing man iyahang right to refinance. Bali, pasabot ani class, kanimanggong una, dili pa existing ihang right. Ayha pa sila nagsabot, no? January 31, ayha pa nagsabot. Kaning ikaduha, at the time pa lang nga nangutang, no? So that means ang utang nahitabo 2019. By the time pa lang nga nangutang si entity, naa na siya discretion nga if ever dili pa siya kabayad, pwede niya ma-refinance ang obligation. Okay? Now, kana siya, the existence of the right to refinance the obligation is already existing as of December 31, 2019. Okay? Say kalahian aning duwa, kaning una, dili pa existing as of December 31 pagka January 31 pagasabot. Pero kani siya under naman gani sa loan agreement, meaning by that time pa lang nga nangutang siya na siya yung ana nga right, na siya discretion to refinance the obligation. Now, although maturing na siya 9 months from now, but knowing that the entity has the right to defer the settlement or has the right to refinance the obligation anytime for at least 12 months. So meaning, pwede siya maka-refinance, pasabot, pwede niya ma-change ang due date for 12 months. So bali, imbis nga 9 months ang utang, pwede na niya ma-extend nga beyond 1 year pa siya. Beyond 12 months pa siya. At least gani, 'di ba? So pwede 12 months, pwede 18 months, pwede 24 months. So in that case, this 10% note payable should be treated as a non-current liability. Okay? Regardless of its due date. Because the entity, at the time nga nangutang siya, the entity already has the discretion to refinance the obligation. Okay? So, meaning that is a non-current liability. For this problem, our answer is only 5 million pesos, and that is letter B. Okay? That is letter B. Okay? That is discretion to refinance. Now, let's try another problem. Question, what total amount should be reported as current liabilities? Elliott Company reported the following liabilities on December 31, 2019. First, accounts payable and accrued interest. Of course, this is a current liability. Accounts payable and accrued interest, that is a current liability. Next, 12% note payable issued November 1, 2018, maturing July 1, 2020. Unsa na ta karon? December 31, 2019. Kanus siya mag-mature? July 1, 2020. Pila man na ka months? That is till after 6 months. Okay, after 6 months. Pero dili sa tamo assume dayon kung current ba or non-current. Lantawon sa nato ang mga additional details. Okay? Next, 10% debentures payable. Next, annual principal installment of 500,000 due February 1, 2020. So, kanisha class, 7 million ang utang, pero payable siya every year. Installment siya, 500,000 per year. So, unsa naman i-treat as current ani? Current portion lang, katulang, bayaran next year. Unsa man ang bayaran next year? Since annually, magbayad ta og 500,000, then ma-due siya every February 1, so katura pong 500,000 ato ang i-treat as current liability. Okay? 10% debentures, current portion. That is 500,000. Okay, so balik ta aning 12% note payable. The 12% note payable is already due on July 1, 2020. That is 6 months from now. Now, let us see. Lantawon nato ang ilahang agreement. On December 31, 2019, the entity consummated a non-cancelable agreement with the lender to refinance the 12% note payable long-term basis. Take note, class, nag-refinance sila. Kanus as sila nag-refinance? December 31, 2019. Pasok ba sa 2019? Ang pangutana ani, on December 31, 2019, nahimo na ba siyang non-current? Take note, sa tong ganiha, kung agreement to refinance nahitabo after pa sa balance sheet date but before date of issue that will be treated as current. But kani siya, dili ni siya after. Okay? This is on the balance sheet date. Meaning, on December 31, 2019, na-refinance na siya into a long-term basis, meaning, nakaabot pa ta sa cut-off. Okay? From current yung 6 months, na-change na siya to long-term. So, therefore, since December 31, nahitabo ang kasabutan, on December 31, this is now treated as a non-current liability. Okay? Non-current liability. Alright? So, meaning, wala na siya ilabot sa ato ang total current liabilities. Take note, if the refinancing occurs on or before the end of the reporting period, the refinancing is an adjusting event. Kasi pasabot sa adjusting event, atuan na siyang ibalhin from current to non-current. Katong ganiha, after naman siya nahitabo, after the end of reporting period, so that is a non-adjusting event. Okay? Non-adjusting. Dili na to siya i-adjust. Current lang siya gihapon. Okay? Kung ilisan ni siya non-adjusting. Okay? Current lang siya gihapon. Okay, so that is for number 8. The total current liabilities is 1,500,000 and that is letter C. Okay, that is letter C. Next, let's proceed to problem 9. For problem 9, on December 31, 2019, Largo Company had a 750,000 note payable outstanding due July 31, 2020. The entity planned to refinance the note by issuing long-term bonds. Because the entity temporarily had excess cash, it prepaid 250,000 of the note on January 15, 2020. In February 2020, the entity completed a 1,500,000 bond offering. The entity will use the bond offering proceeds to repay the note payable at maturity. On March 31, 2020, the 2019 financial statements were authorized for issue. What amount of the note payable should be included in the current liabilities? Okay, take note, current liabilities lang gihapon. Okay? Actually, wala to na ako siya naklaro, Jude. Basahon na ako og balik. Pila ang current liab? Okay, on December 31, si Largo na siya note payable nga 750 due July 31, 2020. So, ato sa siyang isulat ha, note payable of due July 31, 2020. So, meaning that is with after 7 months or within 7 months. Okay? So, that is 750,000. Okay. 750,000. The entity planned to refinance. Okay, so meaning ha, dili pa existing ang iyahang right. Okay? Nagplano pa lang siya nga mag-refinance sa note by issuing long-term bonds. So, ilisan niya from short-term to long-term. Because the entity temporarily had excess cash, it prepaid 250,000 of the note on January 15, 2020. Okay, so gibayaran daw ni niya. No, gibayaran niya ang 250,000. Kanusaan niya gibayaran? January 15, 2020, there is prepayment of the note. In February 2020, the entity completed a 1,500,000 bond offering. The entity will use the bond offering proceeds to repay the note payable at maturity. Okay. On February 1, 2020, na new bond offering. So, new bond na po ni siya class. So, bago nga utang. Okay, that amounts to 1,500,000. So, bali, nangutang siya bago sa katong sa iharag hapong giutangan aning 750, dayon, kaning 1,500,000, gamiton ni niya sa pagbayad aning 750,000 pag abot sa maturity. Okay? On March 31, 2020, the 2019 financial statements were authorized for issue. What amount of the note payable should be included in current liabilities? Okay, take note. Naiutang 750 due currently, unta. No? Pero, gi-refinance niya, gi-change niya into a long-term bond. Question, kanusa siya nag-refinance? February 1, 2020, that is already after the balance sheet date of December 31, 2019. Therefore, dili nimo siya i-adjust from current to non-current. Okay? Dili i-adjust from current to non-current. That is non-adjusting. Nahitabo pa siya February 1, 2020. So, wala na ning 1,500,000. Okay? Dili na nato siya i-consider. Okay? Dili sa nato na siya i-consider. Ma-consider ni siya 2020. Okay? Pero ang pangutan naman ron, 2019 pa man. Okay? How about the prepayment? Gibayaran in advance og 250. But question, kano sa gibayaran? Katong January 15. So therefore, dili man 2019 gibayaran. 2020 man gibayaran. So, as of 2019 man ang gipangutana. So, as of 2019, pila ang utang? That is still 750,000 and that is still due currently. Okay? Current lang gihapon siya. Okay nga no? Current lang gihapon siya kay February 1 pa man ang refinancing. Okay? Dili man 2019 ang refinancing but 2020. Therefore, for this problem, the answer is letter A. Okay? That is letter A. Next, for problem 10, this is our last problem. Problem 10, what amount of the note payable should be reported as current liability? Okay. Dean Company has a 2 million note payable due June 30, 2020. Okay, ato asang isulat ha. Note payable due June 30, 2020. June 30, 2020. So that is still current. 2 million. Okay. On December 31, 2019. Take note, kanusa? December 31, 2019, di ba? The entity signed an agreement to borrow up to 2 million to refinance the note payable on long-term basis. Okay, so meaning, nag-refinance siya. Kano sa siya nag-refinance? December 31, 2019. Okay, ato ang ibutang diri ha. Kung nag-refinance siya, refinancing was or refinance on or before end of reporting period nga December 31, 2019. So that is still an adjusting event. Okay? Adjusting event. Meaning, i-change na to siya. Katong gani ha, non-adjusting kay after naman December 31, kani on or before man, di ba? December 31 man nahitabo. So, this is an adjusting event. Pero, lantawan sa nato, unsay nahitabo sa December 31. The entity signed an agreement to borrow up to 2 million. So, mangutang na po daw siya og bago nga 2 million to refinance the note payable on long-term basis. Unsay pasabot ani class? Mungutang siya bago og 2 million para ibayad niya aning daan nga 2 million. So, kibali, gibuhat lang na nila ba kay para mamurag silbi, nangutang siya balik para ibayad sa daan para ang iyahang due date kato na pong sa bag-o. Nag-base na sa bag-o. Wala na nag-base sa June 30. Okay? Pero nag-base na sa bag-o. Pero take note nga na ay financing agreement. The financing agreement called for borrowing not to exceed 80% of the value of the collateral the entity was providing. Okay? Ilang sabot 2 million. Pero dapat additional condition di ay nga dapat ang iyang bag-o nga utangon is dili mo exceed og 80%. Okay? Dili siya mo exceed og 80% sa collateral. So, meaning, ang ma-refinance ra ato class, kay katulang kung ahataman ang limit. Okay? Nalantaw na to, pila di ay ang value sa collateral. On December 31, 2019, the value of the collateral was 1,500,000. Okay? On December 31, pila ang current liabilities. Okay. So, class, take note, ang mapautang raniya is, so, ang note payable lang nga na-refinance, or meaning katong na-change ang iyang due date, na-change na to long term, kay katulang, limit lang ta, katulang, dili lang mula pa sa 80%. Pila dang 80% aning 1,500,000? 1,500,000 times 80%, that is 1,200,000. So, meaning, ang na-approve ra kay ang 1,200,000. So, meaning, ang portion ra sa 1,200,000 ang na-change from current to non-current. Okay? Kanilang ang na-change. Meaning, refinance to long-term ang 1,200,000. How about the 1 million or the remaining 800,000? This is the part of the note that was not refinanced and therefore, it remains to be current. Okay? It remained current. Dali lang. Okay, so again, the 800,000 remained current. So for this problem, what amount of the note payable should be reported as current liability? Then kaning 800,000, and that is letter C. Okay, so that is for our accounting for liabilities in general. For the next topic, we will then proceed to premium and warranty liability. Okay, so this video is only good for 1 hour. I hope that you can finish the discussion up to this second. Alright, so thank you for listening to this video. I hope you learned something. And if ever you have questions, especially regarding the refinancing, you may ask me in our video conference. Thank you for listening and goodbye.